The only person that should be stressed about the recording is me, since I'm presenting. So. All right. Is anybody else waiting, or people still coming in?
Everybody's in.
Okay, awesome. Welcome, everybody. My name is Danny Nee. I'm the Executive Director for Community Investment Corporation. We appreciate you taking the time out to be part of our Fundamentals of Business Finance class. Tonight, we are going to talk about the profit and loss statement. It's really one of the most basic financial statements that you need. We are an alternative lender. That's one of the things we do. We do micro lending, access to capital, and other things for small businesses. And the profit and loss is really just, it's kind of like the basic thing that we look at. And it's something that if you have a business, we're encouraging everybody to try to put together, even if it's a simple one, a profit and loss statement. So we're going to run you through how to do that, what goes on it, and how it can be used. So this is the first of two courses that we teach. The second one is our balance sheet course, and that will be taught by Betty Vinyl, our business manager, and that's coming up in a week from today. Is that right? So hopefully, if that's something you're not sure about, that's actually a little more complex, and that's why they leave it to somebody smarter than me to do it. And so Betty will be teaching that next week for you. And it builds a little bit off of the profit and loss, and that's why we teach this first. So a little bit quickly about who we are. If you're not familiar with us, we're Community Investment Corporation. We affectionately go by CIC, as you see in my name, because that's a mouthful otherwise. We're a 501c3 nonprofit organization. We've been around since 1996. We are a nonprofit dedicated to financial empowerment. We have a tagline that we know your worth. It comes from the idea that sometimes in the financial system and the financial institutions, that they underestimate people, and they just look at you as being like, oh, can you make me profit or not? Those types of things. And we want you to know that we see you, and we know that you're valuable, not only to our community, to your families, but we know your worth in our economy as well. We manage 3 distinct programs. One is housing assistance. If you're looking for, if you're a first-time home buyer, we have down payment assistance programs. It's one of the things that keeps people out of home ownership is the down payment. We also have a mortgage credit certificate program that's statewide. That can help you save up to $2,000 per year off of the interest that you pay mortgage on your mortgage, and that's in the form of a tax credit. Patty Gonzalez is on the call with us tonight, and she runs our housing and homeownership programs. We have a school and family engagement program where we are trying to help parents out get the information that they want and needs in schools. We do some research stuff. We're actually launching a school locator to help people find schools near them, coming up probably in early March. And then lending and alternative business funding, and that's what we're kind of here for tonight. We run a number of different loan programs. That includes a loan program specifically for BIPOC entrepreneurs. We have a new revenue-based finance product that we're launching, and we actually look at a lot of different types of funding that don't require collateral or assets or wealth. We do some of that lending too, but it's one always requiring existing wealth can obviously leave a lot of people out from being able to get the funding they need. So that's just a little bit about who we are and who you're gonna see. We have a number of people on this call that are part of our lending team. Caroline Nelson is our Chief Operating Officer and our Director of Lending. And so we're sort of packing the house tonight. Betty's on this call to answer any of the questions that you might have. So our first thing that we're going to do, we're going to go interactive out of the gate, and we're just going to ask everyone, have you ever read a profit and loss statement? I believe Nisa is going to get our poll working. I'm hoping that that works for us, and then you should be able to answer it right here by going to the poll. Is that going to happen, Nisa?
Saying that I am not logged in anymore. Do you see the poll on your device?
No, somebody else must have logged in. All right, so we're going to go old school on this. And what we'd ask you to do is if you would just put it in the chat. You know, I'm not flustered by stuff like that. So
It's
have
showing.
you ever
It
read?
just showed up.
What's that? It just
The
showed
poll
up?
is there.
Okay, look at that. All right, so have you ever read a profit and loss statement? And if you would answer that question, it's yes. You know, yes, you do regularly look at a profit and loss. You're not sure what a profit and loss is. Maybe you know, you do something with your revenues and expenses, but not necessarily profit and loss, or no, it's not something you do. And there are no bonus points for anybody answering any particular way. We're just sort of wondering about your familiarity with that. So here I am filling time. Does somebody have an answer? Is somebody can see that? Where are we at? Because I can't see it. So
they do have access. I can see we have some yeses, 3 yeses, 1 no, and 2 not sures.
Okay, great. So that's actually really good. I think it's a good mix. For the people that are yes, then some of this is going to be, you know, I think it's the part you may be very familiar. We teach it in kind of a basic way, but we will talk about like how it can be utilized. So that may be more important for the people who are on that side of things. So the next piece is, have you ever filled out or created a profit and loss? And so that's the second question. Again, it's yes. And if you're answering yes, you're saying that, yeah, regularly, you're not sure, or no. And that means you're the one who's like going and grabbing the expenses and putting it into either some software, you know, like QuickBooks, or you're putting it into an Excel spreadsheet, or old school, you're just writing it out, and that works as well. But so if you ever filled out or created a profit and loss, and we're just again trying to figure out a little bit the level of sophistication and people's experience with profit and loss. How are we doing that one, Jeanette?
Yes, I got 1 yes, 3 no's, and 1 not sure.
Okay, good. Okay, so my hope is that, you know, if everyone's yes to all these things, then I'd be like, great, it's been nice meeting you guys, and we're gonna head out for the evening because you probably don't need us. But at this point, it sounds like we do have kind of a mix, and hopefully this will be helpful going forward. So why and how do you personally use the profit and loss statement? So this is something, if you would just throw it into the chat if you have an answer. Like, so why do you use a profit and loss statement? What are you using it for? What is the reason that you use it? And again, if you haven't at all, no worries. Like, don't worry about answering that. But those who have looked at one, or the one person who created it, so why is it that you use a profit and loss statement? And somebody can monitor the chat for me. And please type something in. All right, we have somebody to make sure the business will be successful. Okay, thank you, Patty. Anybody else? I promise we were not going to do lots and lots. The whole presentation isn't going to be interactive. We're getting it out of the way. It's like icebreakers. So, you know, just hop on in to monitor spending. Great. Okay, that is awesome. Really good. Anybody else before we talk about some other possibilities? Let's see here. Shows company's revenue minus expenses for running the business, such as rent, cost of goods. Great. That's even a little bit further, has a little more detail in it. So at a really basic level, and I think you all know this, you're running a business, and the idea is that the business makes money, that it is profitable. And so the question is like, well, how do you know if it's profitable? And you know, there are different ways to potentially monitor that. You know, you can look at your bank account like and just be like, hey, I still have money in it, so maybe that's profitable. And again, this can go from a really basic level of detail to getting more into detail where sometimes, and people eventually start using the profit and loss to help manage their business and make decisions about their business. And so that's what we're just having. Any starting point is good, and then you can get into more and more detail. So for instance, last year, CIC, we had about a $4 million budget, and we have a lot of different line items that we look at. It's relatively sophisticated, but it helps us to make decisions about our business. So I say that partly to let you know that Betty and I are the ones who primarily work on that. So we know a little bit of what we speak. I myself am also, my wife and I co-founded a small business. It's a web development company. And so I also know this from that entrepreneur side, from owning a small business. So quite honestly, Cecily, my wife, does way more of it than I do. I'm normally busy with my day job here. So, okay, now let's start getting into this type of stuff. Here are some of the things we talked about. The learning objectives for tonight, where hopefully you'll understand the concept and components of profit. Determine whether your business is profitable if you don't already know. We are hoping that you gain familiarity with the profit and loss statement, so you'll have the ability to read one even if you're not creating it yourself. The reality is, and Betty will tell you, she actually creates our profit and loss, and I just mostly read it. And so again, being able to read it, if you have somebody preparing it for you, that's fine, but you also want to be able to do that. And in some cases, if you're small, don't have money to pay an accountant, those types of things, then also your ability to prepare a P&L can be important. And then finally, understanding a profit and loss. And when we say P&L, that's profit and loss, understanding the P&L and how it relates to financing. So the reason that we teach this class is because people come in front of us and they say, hey, we'd like to get a loan. And again, one of the very first things we ask for is a profit and loss, not with all of our loan products, but with a lot of them. We want to know and understand whether a business is profitable and whether you can repay a loan. So it becomes an important part of that. Okay, so what do we mean when we say a business is profitable? Somebody already gave one of those answers. So here's our last, by the way, this is our last of the surveys that we're going to ask you to participate in. In the last 3 months, were you profitable? And so the answers are yes, no. We put in a broke even because that's neither profitable or not profitable, and then or not sure, and that's if you haven't done anything. So in the last 3 months, were you profitable? Yes, no, broke even, or not sure. And we'll just give you a sec to fill that out. And Jeanette, I'm going to rely on you to tell me.
Sure.
Since you've sort of taken over that role, you've just volunteered yourself. That's good work.
The role found me.
How are we doing?
Looks like most people have answered. I'm ending it. So we have 1 yes, 2 no's, and 2 not sure's.
Okay. Also good for the person who knows they're profitable. Not being profitable is also understand, like, this is often how businesses actually start, as not being profitable, but they exist until they can become profitable. So it's not, I mean, it's obviously you would rather be profitable than not, but it's not the worst thing in the world. And then not sure, hopefully we can help you figure that out. So the question is, really basic question again, if you want to throw it in the chat. I think this is also one of our last questions, but how do you know whether you're profitable or not? And there was somebody who sort of hinted at it, but what is the most basic way? How do you know if you're profitable? If anybody wants to throw that into the chat. What you guys don't realize is I was actually a 7th grade teacher way back in the day when I got out of college. I can wait anybody out. It's crazy. If you just sit there and wait. That people will eventually become so uncomfortable that they'll answer. So if we could just get a couple of things in there, awesome. You make more money than you spend, really nice. Income is more than expenses, great. Anybody else there? That by the way, that is why you have people from your staff actually attend these things, because they're also helping out. Your net profit is positive. Like, great, thanks Eugene, who's also on our staff, for using the definition, like using the term in the definition. Like, I don't even know if that's allowed. So I appreciate that. Okay, how you know you're profitable, it really is the idea of when your revenue is more than what your expenses are. It's pretty simple in that way. It's revenue minus expenses. The issue that sometimes I will tell you ahead of time, so I don't bury the lead, as they say, is that people don't always segregate out what the income that they have coming in from a business. That people generally have a better idea of that. But what people don't always do is they don't always include all of the expenses. The expense side is what sort of trips people up in the early going of figuring out whether you're profitable or not. And then just being profitable is one thing, but how profitable is obviously another thing. So tonight we're going to talk about the income statement. Here we go. We're going to hop on into actually teaching you about this stuff. The income statement, another name for it, is the profit and loss. So either way, if you hear somebody talking about that, for some reason my computer is slow. Oh, there we go. Okay. It summarizes all your revenues in one part of it, and then all the expenses in another part. And what's important about a profit and loss statement is it's over a specific period of time. So in general, what people are looking at, they'll generally look at a monthly profit and loss, how they do for the month. They may look at a quarterly profit and loss, and then they'll look at an annual profit and loss. So you can look at it in either time, but you want to gather all of your expenses, all your revenues from that specific period of time that you want to look at, and compare it to basically what people are often doing is comparing their profit and loss from, you know, hey, this month we're doing better than we did last month, or we're doing not as good as we did last month, or this year we did better or worse. And then it's trying to look at the factors as to why that was happening. And that's why you set a time period, and in part because it will tell you about that time period, but also so you can compare it to a similar time period and get a sense for how your business is doing. So it allows you to see trends in your profitability over time. So we're gonna start a sample business, all of us together. We all, you know, we're just gonna pretend we all own shares in 11.
Hey, Danny.
Yes.
Before you get, there's a question in the chat. Is there a recommended time?
So the again, the most common that you see is going to be it's going to be a monthly one and an annual one. And the reason that we say that is if you wait to do it annually, you're going to miss a lot of what has happened. A lot of bad things could have happened, a lot of good things could have happened during that time. So really you should be doing it monthly. And what you'll find though is, like, if you were to come to somebody like us and ask for a loan, we are going to ask for annual profit and losses. And so, but really you actually should be doing it monthly. That's the answer. And then again, you can pick the reason why people do it in other time periods. Sometimes, let's take for example, here in Tucson, summers can be slow for businesses. And so you, like, comparing a summer month to a winter month can be really different. And so that's why you kind of want to compare the same time period from a different time. But you may want to look at some of trends and things that are happening that an annual one may not tell us everything that we need to know, or as a business owner that you need to know. So you'd want to be looking at them monthly. But again, if you know that there are ups and downs to what you do, like, you know, don't freak out. Like, if you sell University of Arizona t-shirts, my guess is you're not doing as well when the University of Arizona isn't isn't in session. So you can expect those sorts of differentials. Okay, so we're going to start a lemonade stand because I don't know, it's like universally everybody's like kids with a lemonade stand. And so what we're trying to do is we really want to look at something simple. We don't want to make it really, really, complex. We can add complexity as we go, but let's start out with something simple. So we all own a lemonade stand, and you can think of it, you own a lemonade stand. There's an opportunity to sell lemonade at a July 4th block party, okay? The rent we'll have to pay to have the stand there is $400. We expect 1,000 people to attend the party over a 4-hour time frame, okay? So in this way, we're trying to add in some things that are, real life, but again, keeping them relatively simple. And so now we want to figure out, should you do the event? So from the information that we've given you, what are people's answers about whether you should do this event or not? And throw that on in the chat if you would. Any of your thoughts on whether you should do this event? And I'm definitely, all right. Jeanette, how much do you charge for lemonade? Okay, yes. People saying yes. How much is selling lemonade for? Okay, great. So here's what I would say is that I'm not sure that you have enough information yet to know. The people that said yes, my guess is they already have some assumptions in their head, and so they may know whether they want to do it because they're making some assumptions about what the cost is to do that. But so it's 400 people. You have $400 for rent, and there are 1,000 people. What we really need to do is start making some other kinds of assumptions to know. And again, this is sort of how we build out business models. We decide what it is, whether we're doing is the right thing, whether we should or not. And that's really at the basis of what a profit and loss is. So we're going to talk about facts and assumptions. Somebody asked how much was lemonade, because that is going to be important. We're selling it. This is the assumption that we're selling it for $3 a cup. And this is why sort of you said, like, it may depend. We may not have had enough information in the last slide to be able to figure it out. There are going to be 1,000 people at the event. We're going to make an assumption that 40% will purchase lemonade. Or do I know that for sure? I don't know that for sure. We don't know, but we have to sort of start somewhere. We have to make a best guess to figure out if it is that we want to do this. And again, this is what business owners are kind of doing all the time, is deciding where to sell, what to sell, whether it's worth their time, those types of things. So again, these are some basic assumptions built in. Okay. I, of course, have to keep moving stuff around on my screen. So your budget now is, we're going to look at the revenues. If we sold $3 a cup and we sold it to 40% of people, that would be $1,200 that we would make in revenues. Okay. And everybody should remember, revenues are not profit. Revenue is the starting point. It's revenue minus expenses that tell you profit, how much you made. So it's very different than like my wife who likes to gamble. She goes to the casino and she only tells me about the stuff that she wins and not what she loses. So if I'm like, how'd you do? She's like, I won $1,000. I wish that was it. But then doesn't tell me about how much did it cost to do that. So this is sort of the same thing. We have to get the expenses in. So the expenses that we know are rent for $400. And so it looks like the profit would be $800 for 4 hours of work. So now you may be thinking, yeah, great, let's do that. $800 for 4 hours of work is pretty good. That's great. Some of the things that we didn't include, rent is not your only expense. So there are other expenses like raw materials, the lemons, cups, napkins, straws. What are other expenses that you guys can just guess at for a lemonade stand? Nardia, I see you have your hand up. You can unmute yourself and ask a question or add something to it if you want.
Please, if you could go back to the last slide, because I can't write very fast. I was Thank you so much.
Sure. And
It
so
was
we
great
are also,
stuff.
just so you know, we also will give you access to these things. Caroline, I don't know where exactly we provide that, but we'll also give you access to this stuff if I'm going through it too quickly, but certainly feel free to grab this stuff here right now.
Yes,
Okay.
we can send out a copy of the slides after the presentation.
Yeah. So so just sort of kind of roll along with us, but we'll give you all those slides so that you guys can have them. So in addition to raw materials, what are potential other costs that you can think of if you were running a lemonade stand? Okay, somebody said staff. Great. Somebody said the tent. All right. Anything else that you can think of? All right. Let's see. So raw materials, these are other assumptions that we're making. It's $1 a cup for all the raw materials for 400 cups. So that we're going to sell. So that's $400, right? That would cost. So that's obviously going to cut into that $800 profit that we had on the previous slide. And then direct labor. So the question is, are you going to sell these yourselves, yourself, or are you going to have somebody there to sell that for you? So in this case, what we're doing, and God bless, we need to update these slides because we're just using $10 an hour for, apparently we're getting like teenagers to do this off the books or something, but we need to pay more than that. But 2 individuals, and because it's a nice round number, $10 an hour for 4 hours costs $80. So that's another expense that would be in there. Waste disposal. We might have to, for the event, they sometimes will charge you a $50 flat fee to throw away everything that's there. We didn't assume that you would know these things ahead of time. What we're trying to do here is just point out that sometimes there are more costs to your business than you may be thinking about at the point that you're trying to make a decision, whether to start a business, whether to take on an opportunity. If you're going to use credit cards these days, not everybody's carrying cash, and credit cards unfortunately have service fees to them. So there's 3% of every transaction they're going to charge you. That's a standard fee for a credit card. Okay. So again, all these things are extra. These are extra sort of expenses that you may not have considered previously. 50% of the transactions are made with credit cards. That's going to be another assumption of ours. And so this is what a profit and loss would look like for this one event in July. Okay. So it's putting together all the information and then putting together some of the assumptions that we had. This is sort of a profit and loss projection of what it would be. So it was $1,200 that we said. That was the 40% of the people at $3 a cup. That's $1,200. And now we're looking at the cost. There's $400 in raw materials, $80 in direct labor, $18 in the credit card with the assumptions we built in, plus the $400 rent and $50 waste disposal. So our $800 profit is now down to $252 for 4 hours. Okay. So the question then is, should you do the event? Is $252 worth it to do an event like this with these costs? And so again, feel free to throw in there or throw into the chat whether you think we should do the event for $252. And again, it's for 4 hours. You could include gas and mileage to get to the event, ice, transportation. All right. So there are some things we didn't even consider that should be considered. That would be extra expenses. So what are people's thoughts about doing this event for $252? Great. Not a really good point. Sometimes getting out to the event and just being there, in this case, if you're running a business, has some value to you. So it's not always just about the actual money coming in and out. People may get to know you. And sometimes when you're just starting a business, like, yeah, you have to do some things that maybe aren't incredibly profitable, but because people have to know that you exist, they have to start seeing you. And so that is a very, very good point. Anybody else in terms of yes or no, should you do the event? What do we have there? Yes, you will still profit. Okay, great. So that's good. And some of this has to do with, so if it's 30, $252 divided by 40, that's still over $60 an hour to do something. And if you're paying somebody to do it and you just sort of have to do the organizing of it, this may seem like a good event. If you're like super high-end lemonade, like, Kardashian lemonade sort of stuff, like maybe you're like, I don't get out of bed for, $1,000 of profit, per hour or something like that. All right. It really depends on your business model, who you're trying to sell to, and you will generally know what it is that is worth it to you or not. So the answer can be different for different people under different situations. Okay. So that was basic. So now what we're going to do is we decided to do the event. And so here's what happened when we did the event. We did not sell to 40% of the people. And so we only sold 200 cups instead of the 400 cups that we wanted. Okay. And so when you start looking at that, and this is what happens sometimes. Beforehand, you don't always know, but you should try to put together projected profit and loss for these types of things. And even with your business, you should try to project out, well, what do I expect to do in a month? Or how do I expect to do in a year? And part of what we're trying to actually show is the idea that people, if you own a business, we hope you're optimistic. Like it takes an optimist to run a business, that you're gonna do well, you're gonna rock it, and you're gonna take over the world. But sometimes the reality is it doesn't always work the way you want. And so we actually suggest making some sort of different types of projections when you're deciding whether or not to take on business. Again, this is a lemonade stand. No matter what you do, like if you're starting a restaurant, you would want to look at how many customers are going to come in, how much per customer do you think will be spent? You have to, minus all the waiters, the electricity, the rent, everything that goes into it. You have to make these projections, or really should make these projections before you decide to start a restaurant, or before you decide to buy a food cart, whatever it is that you're doing. And your business can be obviously different than that. But that's where we're coming at with this. So we only made $600. When we look at the raw materials that we made, it's actually the raw materials are going to wind up being less as well, because you obviously didn't have to use as many lemons or as much sugar or any of those types of things. And your direct labor, though, to make it is basically the same. And the people who sell it, this is all considered a cost of goods sold. And this idea of what is your cost of goods sold, this is where you start adding a little bit of complexity to your profit and loss, because there are certain things there's a certain amount it takes to make a product and to sell a product. And some of that isn't going to change. It's going to be hard to change. Versus what your operating costs are. And you want to be able to separate them out, because you can make better decisions on what your business is doing and how you're doing your business, based upon, by looking at the cost of goods sold, you can start understanding, well, how much should I charge for something? What is what we call the unit price of something? And operating expenses, these also, they tend not to be as set. There maybe you wouldn't want to go to a place that has $400 rent. Maybe you can go find a place to sell your lemonade for free that you don't have to pay that. And so this is, again, starting to look at those, what the revenues are and what the expenses are. So in this case, their operating expenses, you had less because there weren't as many transactions. Your rent was still $400. Your waste disposal was still set. So your total operating expenses were $459. So what winds up happening, and you look as we go through this, is that what we wind up doing in this case is we actually had a negative net profit. We lost money doing this. And the reason is because we made a bad assumption on how much we would sell. And this happens all the time. Again, we understand that you are optimistic and thought like, man, I think I could really sell to 40% of the people that come. But if you've never done it before, and this is also something that you'll see when you approach people about financing or asking somebody to invest or asking somebody to loan you money, if you've never done it before, if you're a startup, it's very hard for somebody to give you money. And the reason is because you haven't tested your assumptions yet. And obviously what people want to see is they want to know that you know your marketplace, that you know that I go to the farmer's market and I sell lemonade and I've been doing it for a year. And I know this is how many cups that I sell on an average day. And I know that it's more during the summer because people are hot or whatever it is. If you haven't done that, it's really, really hard because for anybody to lend you money, because this is what can happen. You can make a bad assumption and you can wind up with a negative profit. So the cost of goods sold, as we said, it's one way to break things out. We think it's really important that you think about whatever product you have. If you are somebody who does like consulting, you sell a service. If you're an accountant, for instance, or anything like that, you are not going to have a cost of goods sold. This is only if you are basically, producing something. And that can also be, that includes if you're buying inventory to resell, that's still, it's still considered basically the cost of the good that you have that you're going to resell. So in this case, we just want you to look at the cost of goods sold and think about, start breaking out your business into cost of goods sold and into operating expenses. These are all still expenses. They all still show up on the expense side of what you're doing. Okay, the revenues are the money coming in, and now we're just looking at different ways to break out with more detail to break out your expenses. So the cost of goods sold is the entire cost to produce or acquire the goods that you're selling. It includes the raw material. It includes any direct labor to produce it. People have to make the lemonade. It also includes shipping in costs. So if you have to pay to ship something in, that would also be included in the cost of goods sold. So your gross profit, not your net profit. Your gross profit is your sales minus the cost of goods sold. And we look at gross profit and net profit. They're two different things. We look at them a little bit differently because the operating expenses are like what it costs to basically kind of operate the business. There's the business sort of like that you're doing. Here's the product. Here's how much we made off of that product. How much the product costs. But then there are people like me, like a director of a place. If you have a director, you're probably the director of your own business. But there are overhead and operating costs that you have to pay that are also part of your business. And it's important to split those out. So as I said before, service companies don't have necessarily cost of goods sold. So what we're going to do is we're going to look at just real quickly how to kind of do what we call scenario planning. And again, businesses should look at scenario planning. And what we suggest in some ways is you look at 3 different scenarios. One that's in best case scenario, one that's optimistic for you. Again, hopefully you If you're not a startup, if you really have never done this before, then you're probably going to have to go and test it somewhere, test selling something. But our hope is that you have some experience selling the product that you have, selling the service that you have, that you've actually done some of it, that you have some sort of background, so that you can make, the more experience that you have, then generally the better sort of estimates and guesses you can make for scenario plan. So in this case, the best scenario for the profit and loss is the $1,200 in sales. It was $600 for cost of goods sold and $300 in operating expenses. Once we started adding in some expenses, and the net profit then $300. The worst case scenario was looking at, in this case, was looking at your sales like, okay, we're only going to sell to half as many people as we were hoping to sell to. Our cost of goods sold are going to be half because we only sold half, but our operating expenses were still the same. And so in this case, the net profit would have been 0. And then some people will do the mid-range one, the middle of the road scenario. We took our best estimate, and then we didn't go all the way down. We didn't cut it in half quite. We did 3/4, and still the operating expenses were the same. And so the net profit was 150. Now, the person who normally does this, presentation, he always says, and really what you should do is you should just throw away the 2 most optimistic ones. And you should look at your kind of like worst case scenario and then decide, is it still worth it to us? And I think it was Nardia who said, and made a really good point. Even if your net profit was 0, if you're not actually losing money, it still may be worth it, depending on where you are in your business life cycle, whether you need people to start getting to know who you are. You know, maybe you find somebody who's just like an incredible, loves your lemonade so much, and now they want to follow you on Instagram and go everywhere that you sell lemonade all the time. So maybe, you know, net profit for that day was still worth it because of some other benefit that you got. But part of what we're telling you from what we see on a daily basis is people tend to be too optimistic. And we understand, because they want to come to us and say, look, we're going to make money. This is going to go really well. And what lenders and people who, you know, a lender wants to look at is, well, can you show me proof? Can you show me either that you've done it before or that you're trending in the right direction? It's not just saying, take our word for it. We're, as much as we really want to help people, we're just naturally skeptical people. I mean, look at Caroline there. Skeptical. Look at that. It's unbelievable. We're actually not, relative to other lenders, we really want to work with you, but we do think sort of like actually being very conservative about your estimates is important to be able to do, especially if you can still make money even when you're being conservative. That's a really great place to be. Are there any questions in the chat, just in case I missed anybody? Okay, so that was giving you a sense in some ways of how, not like a profit and loss is generally, it's something that's looking at something that's already happened. And we just went through a little bit of profit and loss projecting. And again, we think that's a very, very good business practice to sort of say like, okay, conservatively, I think I can do this. Conservatively, here's how much money I might make, you know, at the beginning. And then deciding like, okay, yes, this is worth it to me. I think I can build it up over time, but out of the gate, probably not, you know, maybe it's not going to be making tons and tons of money. So that was the projection part. Now what we're just going to sort of show you is how to kind of read a profit and loss statement. And we want you to remember these things, the summary. A profit and loss statement covers a specific period of time. And the one that we just looked at, it said July. That means that we only really have one event in July, and or it was really a profit and loss for that one event that we did with the lemonade stand at the July 4th event. It is going to include your COGS, and we call it COGS, costs of goods sold. This helps you determine your gross profit. Again, this is something that you should be looking at. If you're not totally sure why, it is still something we can, we can get into deeper with you at some point. But it's, again, the idea of you can't really get around what it costs to produce something, and then how you have it priced and how much of it that you sell. So that's why we want to see like the gross profit. And oftentimes one of the things is people want to know what your profit is like per unit. So the idea of like per lemonade, glass of lemonade sold, we want to get an understanding. And in the last case, it was basically, if I have it right, it was $2 per. But there were other costs that have to do with your business. And that is eventually going to let you know what your overall net profitability is once you add in your operating expenses. So what this is really often used for is when you say, man, I thought I should make more money doing that. Why didn't I? And you can start looking at the individual pieces of your business. And it's not just for you. Again, anybody that you're trying to convince either to loan you money or to invest in you or those types of things, they are also going to ask those same questions and look at things. And sometimes we do what's called benchmarking too. We benchmark against other businesses that we have seen like that. Like, wow, you're paying a lot of rent versus what we've seen in other places. Maybe you can find a cheaper place to rent, or maybe don't go to a July 4th thing where the rent is $400. That may not work for you, and you want to find a way to eliminate some of those costs. Or maybe you're going to, even in the cost of goods sold, maybe you're going to eliminate having to hire somebody. Certainly a lot easier than doing it yourself, but maybe that's not what you do. You don't pay somebody else, and instead you yourself do the work. And a lot of people, that's how they actually start out. The profit and loss can also be used to project, and that's what we also do. As a lender, we look at your past to sort of predict your future. Like for the past year, if you were losing money and then you come and ask for a loan, the question immediately is like, well, how can you afford a loan if you haven't been profitable? And so we would start looking into that. Or we look at how profitable you've been, and then and say like, okay, they can take on another expense for a loan. Or that and this is something that we see all the time in terms of a loan, we want you to use that loan to grow your business, to make more revenue. We want to make sure that the money that you're asking for is being used to generate more revenue and generate more profit for you. It may be by, buying a lemonade squeezer instead of squeezing stuff by hand. It makes you more efficient if your problem was that you were too slow at selling the lemonade during that time. Okay. And then, as we were saying, it can help you get financing. So want to stop there. Before we go into what we're going to do is a little bit of quick sort of review on how to look at a profit and loss statement in a second, and see if you can find the different things on a profit and loss statement. We also have, will be coming up, we are going to give you samples of, you'll have access to a spreadsheet if you use computers and know how to use Excel. We're going to give you access to a profit and loss statement that you can build for your own business. But again, it can really be as simple also as just writing it out. And again, you can start with just revenue in and expenses out, and that does give you some picture of whether you're profitable or not. We generally start suggesting that you start going a little bit further, that you get more sort of more detail into your profit and loss with more what we call line items, budget line items, so that you can, again, start making decisions around your business. So any questions? Are there any questions in the chat? Okay, where are we at? Oh my gosh, Caroline, can you help me out with that?
Yes, as far as questions, we're good.
Yeah. Okay, nobody has any questions? Wow, all right. I'm amazing, or you guys are liars, but that's great. I'll take either one. I've always said to people, like, I'm fine if you lie to me. Tell me I look younger than I am. I'm okay. It makes me feel good. All right. So we'll move on. So here's another sample business, All Things Fermented. This is a producer of fermented foods. You can just tell the guy who normally does this. He is a tree hugger doing this like kimchi and sauerkraut kind of stuff. So anyways, this is what the funny part is this is actually based off an actual business. Not exactly, but we had somebody who was doing fermented foods. So they're a producer of fermented foods. They sell wholesale. So that means that places who then want to resell it, buy it from them wholesale. They sell it online, which, a lot of people these days, direct to the consumer. And they also sell at farmers markets. And basically they're selling it at about $5 per jar. Okay, so these are just some assumptions with the business. So this is what a profit and loss, they come to us and they say, hey, we'd like you to look at, we'd like to borrow some money. And we say, okay, well, can you give us a profit and loss for the last year? Apparently we're stuck in the pandemic because the last year here is 2019. So we probably have to update that at some point. But so we asked them for their profit and loss. And so they give us, as I said, somebody asked like, hey, what is the time frame? Usually somebody like us, we're going to ask for an annual profit and loss. So this is from 2019. We're all going to time travel and pretend we're in 2020 right now when they came and asked us for this. So what you're looking at is you can see that there is the revenues in one place and then the cost of goods sold in another place. And this is how profit and losses are usually set up. And then there's a gross profit line item. They sort of look at that first. And then in a general profit and loss, this would all be on the left side of the page, but we're limited by, by the screen size here. So imagine the stuff on the right is just below the stuff on the left. And then operating expenses come. And this is how it's standard. This is how things are set up. You have your revenues, you have your cost of goods sold, you have a subtotal for your gross profit, then you have all your operating expenses put in, and then your net profit, income, and earnings. So for those who have seen P&Ls before, there were people that said, yeah, I've definitely seen them. Some people like created them. This is more likely what you'll see than the really, really simple lemonade stand. It has a lot more sort of line items in terms of like looking at the different expenses. Okay, so what we want to know, this is what it looks like, and you can see if I asked you right now, so what's the total revenue? Can somebody just tell me, put in the chat what the total revenue is for All Things Fermented? All right, 10,540. Great. We're going to see that in a second. Also, because I just made sure I previewed the question. So what is the time period that this covers? And, so what time period does this profit and loss statement cover? Pretty simple. We talked about it at the beginning, but again, we're just checking. Okay. So it is a time period of 1 year. More specifically, that year is the entire calendar year for 2019. Great. Okay. I know these are sort of basic sort of things, but that's what we want to do. Most of this is actually, it is relatively simple. Each item in a profit and loss is pretty simple. It just gets complicated when you start seeing the number of things that you wind up having to track. That's, that can be daunting. And the reality is what we want to say is like, okay, but it isn't once you sort of get it set up the way that you want it. It isn't as daunting. It's just because there are a lot of different lines. So as we looked at, we asked what the time period was. You guys told us that. There's your answer, right? And that's where you find it. How much total revenue did All Things Fermented earn? You guys already answered that for me. There it is. There's where you find it. Okay. So I'm going to go back here. So what was the largest source of revenue for all things fermented? So if you would just put that in the chat. Again, this is sort of, I totally get it. This is like being back in high school or middle school where, you're being tested on what you just learned. We're just sort of testing that people are getting and that they see where to find this stuff. All right, so people are saying wholesale. All right, so let's go and look, which you guys, I'm sure you know that you are right. And if those who weren't sure where to find it, again, we asked about what was the most revenue, where did it come from? And you could see why this, I hope you can see why this might be important. If you thought like, hey, we're in 2023, it's all online these days. and you just invested in selling everything online, and you weren't looking at how your revenue was actually generated by different sort of sources, you can make the wrong decision really easily. So this is, again, why it is that we suggest, like, the most simple profit and loss would be revenue, money in, expenses, money out. And that's why we start suggesting to add some detail. Okay, so now we're looking at revenue, all the different sources of the revenue, because that's going to be really important for us to make decisions. Where do we make the most money? What are the best, again, depending on what you're selling, if it's a lemonade stand, what are the best gigs? Is it, lemonade on the street corner? Is it lemonade at a farmer's market? Are you eventually able to, package your lemonade and sell it somehow? And it becomes really important to figure that out. Okay, so how much net profit did all things fermented make? So again, just throw it in the chat. We're just testing knowledge here. How much net profit did all things fermented make? 477.20. It seems to be like a popular number. 477.20. Okay, great. And once again, everybody gets to move to the head of the class. If I can get this to switch. There we go. So, and there's where you would find it. You're always going to find on a profit and loss. Again, this is a little messed up because it's over on the right. If you look at a profit and loss, the one that I look at all the time for Community Investment Corporation, I always know to find it's the very last number that you see, all the way at the bottom. That tells you, and that's why people call it the bottom line. People say that, if you've ever heard like, hey, what's the bottom line? That's where this comes from. It is, what is your net profit? And it's because it actually appears on the bottom line of a profit and loss statement. So in this case, again, if this was over on the left side, it would be all the way at the bottom. That's where you find it. Okay, question 5. In terms of expenses, which is greater, total operating expenses or total cost of goods sold? So I'll go back. What's greater, total operating expenses or total cost of goods sold? Go ahead and throw your answer in the chat. Total operating expenses, total operating expenses. All right, here's a bonus to anybody. And let's not have it be from CIC. Approximately how much greater? Round up to the nearest 100. How's that? Or down to the nearest 100. So somebody who's participating that's not a CIC person. I have all these people that are trying. All my staff is trying to impress.
Could you please repeat the question?
Yeah. So it is. What is the difference? How much greater is the total operating expense line item versus the total cost of goods sold? So everybody pointed out that total operating expenses were greater. How much greater is it than total cost of goods sold? And again, doing the
1,000.
math. What's that? Go ahead. Nardi.
About 1,000.
Okay, it's about 1,000. That is absolutely right. It is about $1,000. So it's 5,534 minus $4,528. So there's about $1,000 difference. Great. And again, this is really just practice about finding information on a profit and loss. You know, that's the step. Like first you sort of learn how to read one, and then you can start creating one for yourself. That is the idea of how we do this. Okay. Again, you guys already answered it. Here's where you find that information, right? Okay, what is the largest cost under COGS? What is the largest cost under cost of goods sold? Again, we're just trying to find things on our profit and loss sheet here.
Raw materials?
Raw materials. All right, great. I think that is 100% right. Okay, $2,800. So here is something to sort of look at. So we're looking at all this stuff. And again, when we say, well, what can you do with a profit and loss? Like, how does it help you analyze your business? How does it make you make decisions? Because that's really what it's there for. Its greatest use, like, again, we use it as a lender. It's required if you're going to, it's generally required if you're going to apply for a loan. So that's, you know, that may be one reason to do it. But the real reason is it gives you information about your business. It helps you make decisions about your business, including sometimes being like, oh my God, this isn't as good a business as I thought it was going to be. Like that's an okay realization too. Or man, I really need to figure out how to make my business more profitable to make it worth our while. So here's an insight that you can get from the P&L. From that last all things fermented, if that owner is working 10 hours a week running the business, then the net profit is $477.20, 520 total hours, 10 hours a week in a year. There are 52 weeks in a year. It's people who deal with profit and losses and payroll and stuff like that. We know that there are 52 weeks in a year. And so that's 520 total hours. And that means that this person is making 92 cents an hour. So if this is your business, that might be a yikes for you, but it might not be a yikes either. It may be you're just getting started out, and breaking even is actually just fine with you. It may be your side hustle that you have other income coming in. You can't always just say like, oh my gosh, that's terrible. Well, it depends again where you are. Maybe you've been seeing this trend up. You went from losing money to getting to this point, and now you're trending upward and hopefully can make more money out into the future. So there isn't necessarily one way to see that. I do think, again, a lender is going to look for you to be profitable, and the more profitable you are, the better in those cases. But we also have different types of capital and funding we offer to people where you don't have to be the most profitable ever, because we're not doing what banks do. We're trying to help people that banks won't help. So are there any questions on that? Any questions on just how to kind of read it, where to find the information? Again, super quickly, it is, you know, you have your revenues are up top. They're always up top. You're going to have your COGS if you have them. And then you're going to have that subtotal of a gross profit. Then you're going to have all your operating expenses, and then your net profit, which is the last line, the bottom line. It's always the bottom line, and that is your net profit. And most people, when they look at a profit and loss, the funny part is, those of us who have looked at them, we almost always start at the bottom line. We'll always look there first to see what the overall profitability is, and then we start sort of figuring out the story from there and in the other places. Okay. Any questions on what we've gone over so far? All right, we're almost done here. Just have a few things we're going to follow up with. Okay, so that's great. What should I do now? Well, one thing that we want to suggest to you, and this is very self-serving of us, but it is also really in your best interest. If you are running a business and you do not have a business banking account, you need to start one. Again, this is a requirement. If you ever want to ask for a loan of any type, you will have to have your own business bank account. And the reason is because you shouldn't be commingling your personal money, and that includes money that may be coming in from a job or those types of things, and your business money. It is much easier to actually assess your business if you're only dealing with the revenues and the costs and the expenses of your business in one account, where you can see all of that in one account. So if you haven't done that, it is really something that you should do. It's one of the things that we require. We help people do it if they don't have it when they initially come to us. The other part, which is honestly a little bit harder, it is that idea of organizing your data. So how do you organize? How do you know your revenue and your expenses? And that's why this can be at times like if you can get like a business credit card, then all those costs can go on that credit card. Hopefully you're paying that credit card off every month. But there can be details like that. If you have a business bank account, there are certain services that will basically automatically pull and categorize your expenses and your revenues. You generally have to do a little fixing of it. You can't just let it do it itself, but they are a good starting point. But you have to figure out how to organize the data that you have. And by data, it just means it can be receipts, it can be the information on your finances, the money that's coming in, the money that's going out. One thing that we suggest, if you're going to start again at a basic level, is to create a chart of accounts. What you saw on the last P&L from the fermented, all things fermented, is you saw a lot of different line items in the expense lines, and there generally are more expense line items than there are revenue line items. That's not always, but in general, there are fewer revenue line items, and there are more expense line items. And you want to think about what are your most important expenses. What are the categories of expenses that you have? So it helps you analyze your expenses, and you'll just want to look at that and think about it, and then come up with buckets. So these big buckets that if you're just starting out the all things fermented, I think that's probably too detailed. And again, you're going to go somewhere from between just having like, here's all my money revenues coming in at the top, and here's all the money going out expenses at the bottom, and net profit, to adding a little more detail. So go somewhere between that and the all things fermented, and as a starting place, and you can be good. So these are different categories that we may be talking about for the way that you want to talk about your buckets of expenses, depending on what you're doing. Maybe food, beverage, alcohol, rent, that is a common one, unless you're doing this from home. Advertising and marketing expenses. If you have computer expenses, if you have any, sort of monthly subscriptions that you use for something that goes with your business, that should be included. It's a business expense. Your direct labor, anything that you're paying somebody. The direct labor to anything that you're paying to have somebody create your whatever it is, your product, and then also wages and salaries of indirect if you have administrative staff, somebody who's not directly producing what it is that you're selling. Okay, those are just some examples of them, and then divide them into, again, you want to look at the cost of goods sold. So we want to divide those out. What's the cost of goods sold versus what is an operating expense? So if you had food, if that was something that you were producing, in this case, that would be a cost of goods sold. A beverage is a cost of goods sold. Alcohol would be a cost of goods sold. Rent is an operating expense. It's not an expense that goes into producing whatever your product is. Okay. Advertising. Now that we've done a few, what is advertising? What do you think that is? Go ahead and throw it in the chat. Is advertising a cost of goods sold, or is it an operating expense?
Depends, I think.
Okay. generally speaking, unless advertising is what you're doing, it is going to be an operating expense. It's not a cost of producing, the lemonade or the fermented stuff, the sauerkraut or things like that. So almost always advertising, marketing is going to be what we call an operating expense. The same will go with computer and software, unless unless that's actually what you're producing, then that's just something that helps you run your business. That's also an operating expense. The direct labor to produce whatever you're doing, that of course, again, goes into cost of goods sold. So in nonprofits, what we talk about is that's like our program staff, the people who are actually doing the program. And then there are people like me and Betty, who we do work, and it's more like administrative work for the entire organization. And that's gonna go in the operating. They're still really important because there's still expenses. And again, that's if you're a little bit, it's generally if you're not a sole proprietor, if you're not just the only person running your business. If you have other support staff with you, and they're not just, doing sales and producing your good, oftentimes accountants and those types of things, those are, or other administration, those are going to be under operating. Okay, so voila, there you go. You have your chart of accounts. If this was something where if these categories made sense for your business, you have to think about what your business is, but start looking at what are the buckets of expenses that you have. And that's how you start producing, this for a profit and loss statement. So you can also create a chart of accounts for income. You're going to look at what your revenue is. 1 to 10, if you had 10 buckets, that's a lot of different things that you're earning revenue off of. Generally speaking, again, out of the gate, there are just going to generally be a few different line items that you're making your money from, and you may want to break it out. Again, it's hard to do it with everybody. You all have different businesses, but there are different channels of business that you may have, and it's good to track where that business came from if you can figure it out. So is it, we saw before, like wholesale versus online businesses, and that will help you then create a revenue for charts of accounts in the categories. They may want to break it up and know, here's how much I made from the food that we sold in terms of a restaurant. Here's how much I made from the drinks that we sold. Here's how much, and drinks being non-alcoholic, and here's how much I made off of alcohol. Here's how much I made from our catering business. And then you may actually have a negative income item, which is the discounts that you've given. That's a little tricky, a little more advanced. But again, I think looking at, if you're a restaurant, you can see knowing why each of these would be important to know. And also the expenses that are associated with each, because you want to see what is most profitable. It's again a way to look at your business. Okay, maybe we need to find a way to make our food more profitable. We're not making very much on it, and we're a restaurant. So how do we either need to charge more for the food we're selling, or we need to cut expenses somehow, using different ingredients, finding different vendors to help you, those types of things. Okay, so that would basically be a way to look at, let's say you're looking at food processor that's different than a restaurant. You're looking at your wholesale, your retail, your online, maybe you're doing some consulting. Again, this is, it's hard for us to do this. We're just trying to give you examples. People generally have a good sense of, a restaurant or somebody who's producing food, and that's why we use it. But it's about you hopefully know what your sort of buckets are. And you can get all the way into the nitty gritty if you want. I mean, you could look at in food, you could look at meat versus vegetables versus other things. But this is, we think, is sort of the good starting point. Don't make it too complicated out of the gate. It doesn't actually need to be very complicated to give you a lot of information to help yourself. Okay. All right, so tools for organizing finance. Here is one way, is just the paper pencil calculator. good to go old school. If your business, you know, don't have just tons and tons going on, this is just fine. It works okay. And we suggest that you do it. In this day and age, a lot of people, before they go and get like actual accounting software, which can be expensive and in some cases, and also there's a learning curve to figuring out how to use it, those types of things. We suggest just using a spreadsheet. Now, if you don't have a computer and you don't have Excel, you know, you don't know how to use Excel, there are places to learn it. You can also, if you have a computer but just don't know how to use Excel, there are still places that you can go online and get free access to things that are like a spreadsheet where you can keep all this information. And so we suggest to people that, yeah, if you're doing this stuff yourself, then you probably want to invest. There's a lot that you can do with Excel. We actually use a ton of Excel in our business. You know, we do have accounting software, so we don't use it for that, but like for some internal budgets and things that we do, I use Excel for internal budgeting all the time. So, and then there are other things, accounting software. They can be either like when you say desktop, that you buy it and it's on your desktop, or there's online. You would go to on the internet, you have a login, and your information is stored there. And two, for example, are Wave and QuickBooks. We're not telling you one or the other. QuickBooks is a really, really standard one that people use, but it can also be more expensive, and it may be too much power. You may not need all the things that QuickBooks does. There may be much more simple solutions. Wave is one of those other options, but there is stuff online for that. Okay, so we do have our own that we are gonna put, I think, Caroline, or there should be a link to this. I can't see the notes. I know it's in the notes of this. So if one of my staff would look into where it is on Teams and maybe grab the link, and we'll share. This is something for free that we will give you, and you can see in this case what we've done is it's really pretty simple. You can add your own lines to this if you know how to do that in Excel, but as we're saying, a profit and loss doesn't have to be incredibly complicated to really give you a lot of information. Okay, and so we're going to give you that link to be able to do it. They'll put it in the chat. You can copy it down. You can cut and paste it into computer and into the internet, and it's something that you'll be able to download. So let me see if here's the link. Okay, someday we're gonna have to rename that link because that's a weird name, but there you go. That's a way to for you guys to actually get a profit and loss if you've never had one. And I hope you see again how sort of basic we made it. Overhead's like all of your rent, all the costs of your electricity and utilities and other those types of things as well. Okay. All right. So here is again, if you were just going to do it, this would be fine. For if you want to do it by hand, it's okay. Like we think it's more important to do this than to be scared and do it even by hand than be scared off by if technology is not your thing, if you're not sure about that, how to do that, start with this. Start by just writing the stuff down and calculating it for yourself. That I would be super impressed if I saw somebody roll it into our office with something that was handwritten, because it shows us that you care about your business and you care about knowing about the different parts of your business. Okay. Okay, what you would normally do if you're using a spreadsheet versus any sort of online thing is you're going to have to track your receipts. So you can do that sometimes. Again, this is why if you can get a business credit card, sometimes it's easy, because if you do all of your expenses via that credit card, then you get a monthly statement that shows you everything you spent. Plus, sometimes you can earn miles to fly. You can get cash back or whatever it is. Again, you want to pay that off every month because credit cards can be really expensive if you don't pay off the balance. But this is one good way of doing that. You will, you're going to want to look at your bank statements. Obviously, again, that's why you would want to have a business bank account, because that's going to show you all the things that's related to the business and that you don't have personal stuff in there. Again, if you're paying cash for stuff, I mean, you may have to, but it certainly makes it harder to track, right? If you're paying cash for different things. And this is when you get cash, if that's what you're doing, make sure that you are tracking that cash. If if you're working at a farmer's market, like make sure you're tracking that cash, get it deposited into your business bank account. Okay. If you're using a spreadsheet, what's great about bank statements and credit cards is these days you can normally download it as a file that easily goes into your spreadsheet. As we said before, you're going to create categories and charts of accounts. There are templates online. Google's still amazing, even when it drives you crazy, still amazing to find out all these things. And we, again, can certainly help you with some of that. If you're not sure and you're just getting started, we can help you. And there are places like the YWCA Women's Business Center, Startup Tucson. If you don't know any of those places SCORE is another place. They can help you with some of the basic business, things that you need. Okay. Well, questions? All right. So we are at the end of our presentation. If you don't have any questions, one thing that we want to do is we want to give you contact information. Caroline is on this call. Again, she is our head of our lending. She may have one of her staff contact you back if you contact her. So anybody who's basically, all of our emails are at cic.org. If you reach out to her and you get something back from somebody else, it's probably because she's having somebody else work with you. But here is her contact information in case you want to know any about our loan products and the way to access funding. Also, we can give you, again, referrals over to some of our partners who do a lot of the business teaching and mentoring, if that's something that you want to do. But we want to thank you for your guys' time tonight. We hope we started out and what you take away from this is it's okay to start out really basic. It's okay to start just with like those big categories, revenues, expenses, and then to make them having a little more detail over time. We hope you understand that, sure, it definitely helps us as a lender, and it would be required from any lender to have a profit and loss, but more importantly, it will help you understand your business better. It will help you understand where your money is going and where it's coming from. We're always happy to try to help you. That's what you're going to find is there are a lot of people in this sort of ecosystem space. They want you to succeed. And so we'll try to give you the tools that we can to help you run the most effective business that you can. So are there any other questions before we let everybody